Alrighty, guys. Thank you guys for tuning in to another episode on Let's Talk Black Knowledge. I'm Jasper, the owner of Black Knowledge, where knowledge leads to success. And today, guys, we're gonna be talking about investing, right? And the importance of it, especially the coronavirus. But today, I got a really great guest who's been doing stock for a while. We've been talking stock, we've been doing stock businesses, we've been talking about cryptocurrency, we just been talking. And Darren, this queen here, she dropped knowledge about stock. She talked about investing, and I had to get her on the show. I had to get her on the YouTube channel just because of her knowledge that I know that she drops. So without any further ado, I'm gonna go ahead and let Queen Darren just introduce herself. Let the people know who you are and what you do.
Thank you so much, Jasper, for having me on your platform. I appreciate what you contribute to the community. You always have some dope informational stuff about Black history, and just encouragement about entrepreneurship and ownership in the community. So definitely do appreciate you even just spreading that, because there be so much toxic stuff online, and you be giving light to the positive in the stuff, and you're very blunt but in a good way. So I really do like that. And once again, I appreciate you having me on your platform. So my name is Darien Lewis. You can find me on IG at Lewis Premier Stocks. I've been invested in the stock market for 5+ years. I'm a stock market coach. What my main thing is to empower others with knowing that the stock market, it doesn't take a lot of money to invest in the stock market, and you don't have to as well feel like you're intimidated because of the information, because you have resources in your community and people you can go to that you can speak with that can get you started, like someone like myself, which is a stock coach. I'm self-taught, and I've been doing this for a while. My biggest thing is to, like I said, empower others, because if I experience the benefits, you can too.
So how long? So talk to me. Let's keep it real. This Black Knowledge.
Yeah.
So I don't know. Where you from?
I'm from North Carolina. I reside in Charlotte, North Carolina. Yeah.
Shout out North Carolina. I don't like Fayetteville. Whatever. Got them tickets.
That's crazy. Anyways. That's my hometown.
you know that. Anyways, okay. I'm from South Georgia myself. We don't talk down there in the country. See, I'm from Section 8. Wait, Roman noodles, tap water. Did you have anybody in your life teach you stock? Because you said you just said that you was self-taught. What got you that interest into stocks?
Oh, excellent question. My family, they were mostly built around the educational system. Get a degree, get a good job. So how I got started was after college, I got the corporate 9-to-5, and I realized financial security is just not through the corporate 9-to-5. So nobody in my family really talked about generational wealth. They just say, hey, get a retirement, get a degree, and get a good job, and you straight. And I learned after going through the corporate way, working at the bank, all that good stuff, that's not the only way. So I started researching how different ways people build wealth. So I ended up coming across, of course, real estate and stocks. Those are the main two things. So I wanted to look into stocks because I know that's one of the biggest things that people in our community may not talk about on the mainstream level. So I was listening to Boyce Watkins. He's one of the first people I kind of like grasped to, that I seen as a person that looked like me, that's like talking about it and know what they're talking about. So I started listening to him. Then I started researching on my own. And then I started investing blindly, which was a mistake.
Good. We ain't gonna talk about that.
Yeah. And then from my investing blindly, I started actually learning my lessons. And then from my lessons, I ended up making profits. So my biggest thing is showing other ways. Hey, you need to get the knowledge and apply
it. Let's go deeper, because I tell people this Black Knowledge, and I always get the entrepreneur's point of view. Cool. I'm from the hood, but I'm from the hood.
Okay.
I don't know if you're from the hood. So I'm trying to figure out, I want to know that trigger. What made you interested in investing? I hear you with this. I went to school. I got this degree.
Right.
That's the what Black people just aren't interested in investing. Let's keep it 100. Not all of us.
Okay.
Some of us are. So it's like you got interested in it.
Right.
What made you? Was you broke? Was you like trying to figure out where to put your bread, or Talk to me. Like, how did you really get into it? Like, what was your first stock investment? How did you come to that? You know, I'm about stock, and this is what I'm about.
Got you. What really motivated me was I was pissed off that I was lied to about getting a degree. I was pissed off because I felt like that was the biggest thing that was fed to me, and I found out the hard way. Not because my parents and my family didn't care about me, but they didn't know no better. Mm-hmm. So I was pissed off because I was like, dang, nobody is telling us, all they're telling us is to go run, get a job, and not really put our money to other places. Nothing wrong with a 9 to 5, but that's not financial security. So it just kind of pissed me off because I learned after a while I was working paycheck to paycheck. Even though I had a good job, I had to start learning how to manage my money outside of that good job. Because you can make $100K, but what is that $100K if you're not managing it and you're not investing it? It's just going to bills and maybe a vacation or so. But I wanted something outside of it because I was pissed off about learning about my degree. And then I always had a mentality to go into entrepreneurship, but I was shunned away from it because my family, they were more about just go to school. So it kind of just pissed me off.
I come from a similar background, but it's not like I was shunned from it. It was like, my view about entrepreneurship for a second. You know, we're not going to get too much into it because it's about investing. But don't worry, guys. She'll be back on the show, and we'll be talking about entrepreneurship. It's just number one. You know, shout out North Carolina. You know, I appreciate you taking time out your busy schedule, you know, for even being on the show. And you know, back to what I was saying is, entrepreneurship is one of those things where I kind of thought, like, for a moment there was a moment of unknownness where I thought, like, if you didn't have a job and you kind of did your own thing, you was lazy. Like, you just go. But there was a lack of understanding, you know? Like, I didn't understand that you're building wealth for yourself, not for something else. So, my next question for you is, okay, with investing, what's our first, you was mad, pissed off, I didn't get it in my upbringing environment. What was the first investment you made?
Cool. The first investment was I went straight to the big names, Apple. And I went to Apple because I've had an iPhone, and then Apple was in the news definitely about they were in the news heavily, still like they are today as a big tech player. So they were inexpensive at that time, like probably $100 some a share. They were cheap. So I went with them.
What year?
This was around 2015.
Okay.
So 2015. Okay. So I went with them. I sold them in 2018 because I ended up selling some of my shares to put a down payment on my house. But I went with Apple. That was my first investment. And I did a Netflix and stuff like that. And then what I did a lot too is every time my money, sometimes I did this. Now this was a big mistake. Sometimes when my money started going red, let me hurry and get out of it. Big mistake. And I didn't know that at that time because nobody taught us that it's going to recover. It's going to go, if it's a good company, it'll just bounce back. That's just part of stock market fluctuation. So I went with Apple, but then like I said, I sold stuff and I invested blindly at some point.
So I like to ask you guys, like I say, I tell every entrepreneur that I interview, I like to ask you guys questions because we have a lot of entrepreneurs that send me questions about stocks all the time. So knowledge seekers, these questions are from you. I'm looking at them from my phone. This is for you guys. So I got you. And the first question I got for you is, where are some locations? Number one, where can I purchase stock?
Where can you purchase stock? You can purchase stock through any online broker. Robinhood, TD Ameritrade, Webull, E-Trade, Charles Schwab. They're about to merge with TD Ameritrade. Fidelity, Vanguard. Look up commission-free brokerage accounts.
What
and you're gonna get like
what is that? Understand?
Oh yeah. For commission-free, that means you don't get tagged with a fee for buying the stock. Only thing you got to come to the table with is just that money for your stock.
Like, I'm an investor too, guys. You guys know I talk about silver and gold. I'm an investor too.
Mm-hmm.
And I will say that $4.95 trade fee, with Robinhood coming out, they had to get rid of that. And say, because I tell people, because, we're talking about investing now. And when you, that was a great question, from this knowledge seeker, shout out to the knowledge seekers. And
very good question.
100%. And really, it's also preference because they kind of all do the same nowadays. You know, trade, pay free, whatever. I'm with Fidelity, and with Robinhood. I did have, we have to mention them because they're an option, and then he did mention them. His message is, what about Acorns and Stash? Are they really good investments? And I will say that Acorn and Stash is for my lazy investor. It's for my lazy individual who not really my lazy investor. Let me take that back and say maybe my individual that's not just interested in researching stocks. And like I said before, you said it live, I'm gonna say it here on this YouTube channel. I'd rather you invest in Acorns and Stash than not invest at all.
Put your money somewhere.
You know what I'm saying? Still making money. So, okay. Now, the next question I got is, okay, what is a ETF and what is a mutual fund? Okay.
Good question too. ETF is an exchange traded fund. It trades like a stock, and what that means is you can buy it like a stock. You can buy it versus a mutual fund. It's a little bit different, but it's almost kind of the same class. But the breakdown of ETF is basically a pool of stocks and probably sometimes bonds too. And what happens is if you want to buy like an expensive stock like Amazon, but you like that costs too much, you can get that in the ETF as well as with other stocks involved in that ETF like Amazon, Apple, Google. You can get them all for a bundle for one set share price. So what happens is when all of them do well, the share price of that ETF moves up in value as well. Mutual fund is about the same thing too. Mutual funds are more so like once you buy into the mutual fund, the shares of the mutual fund, you don't have to necessarily have that. It doesn't trade like a individual stock. You buy into the mutual fund, and then once you buy into the mutual fund, you can set how much you want to put in there monthly, and it'll even buy just continuously fractional shares for you. So let's say if you brought into it originally and the shares were like $50 and you brought like 5 of them. Let's say if you say, okay, moving forward, I'm just gonna put $50 in there monthly. It'll just buy how many shares it can off of that $50. And sometimes it can be fractional. So it's a pool of investments too, a mutual fund. You get a bundle of investments too.
Oh, we have to mention this just because I forgot about it, and it's a part of the trading platform now too.
Okay.
You also buy a stock from the Cash App, which I currently in testing that platform myself. I don't really have a lot of money into it, but I'm testing it in their fractional shares capability because Robinhood offers fractional shares now. Shout out Robinhood. Don't worry, guys. I'll be making videos. I'll probably even get, not on this interview, but I may even invite, Darien back, and we'll break down Robinhood. We'll break down Fidelity. We'll break down. We may even go over the top 5 stocks, the top 5 ETFs, because knowledge is not power. The application of acquired knowledge is power. So I hope you guys are taking this information in because he's dropping these knowledge bombs about mutual funds and ETFs. Okay, let me go to the next question. The next question is, where can I get stock information about stock?
If you are not ready to come to a stock coach like me or even inbox somebody like Jasper just yet, on your own, you can use websites like investopedia.com, usmoneynews.com. Those websites are good because Investopedia breaks down a lot of terminology for you. And they have a lot of good investment strategies. US Money News, they give you a little good ideas on they give you a lot of good investing ideas and give you a breakdown on who are the top players in certain sectors as far as like industries that you may be interested in investing in. And they just also give good money tips like as far as saving and credit cards and all that good stuff. But you want to get the information first because you don't want to invest blindly. You'll end up losing money. More money. Everything's a risk. You'll lose some money in the stock market, but you'll lose much more when you invest blindly.
It's the long game. Like me, myself, personally, I don't know about the knowledge seekers or yourself, but I myself am a dividend investor. In my main portfolio, because I'm actually in the process. Oh, we forgot about another platform I just remembered. M1 Finance.
How was that for you?
M1 Finance?
How was that?
I didn't look, they took too long to deposit your money. This was, a while ago. This was when they kind of first came out, kind of ish. So I think they still had some upgrading to do. So now I did return back because I actually like their functionality with their pie charts and then how you can set up. I really like their platform. I like the functionality. But I don't know, like I'm not into Webull yet, but I know I'm going to probably get another brokerage because I really like Vanguard. I really like what they offer. Vanguard.
Yeah. Fidelity's good too. You got your money in. Fidelity's a good, pretty straight to the point platform too. Yeah, Fidelity's good too.
So let's talk about the different sectors let's talk about stock sectors for a second.
Cool.
What are the different sectors that individuals can invest in?
Cool. You got a plethora. It's like shopping because you got different sectors. You got tech sector, and the tech sector has different industries involved in it. You got the real estate investment. You got real estate sector, and that deals with real estate investment trusts where you can invest into real estate through the stock market. You got healthcare. A lot of people like healthcare stocks because they feel like healthcare is a necessity, whether you agree with it or not. You got your consumer defensive stocks. Those are basically like companies that you have to always buy into, like your Targets, your Walmarts, your Costco's, your Dollar Generals, Dollar Trees. So they're big retail chains that they make money no matter what the economy is doing, up or down. Just like the coronavirus situation, these companies still thrive. You got your consumer cyclical companies. Those are like your Nikes and your big retail, big name brand stuff like Nike, maybe Adidas and stuff like that. They can get hit very hard when the market is down.
I tell people with the different sectors what I tell lazy investors, not really lazy people, but easy people that want to get into stock but don't really know, don't really want to do a lot of research. Because you know me and you, we nerds. I know me and you, we
gotta look at everything.
Looking at cap, market cap, closing price, opening price. We know that's a foreign language to you guys. We will talk about that later. But we're looking at financial statements. Okay, what was your dividend output last quarter? We just started a new quarter. It's the coronavirus.
Right.
You get different things. But I tell people you don't have to do that. You can literally buy like 6 mutual funds. You can literally buy like all the Vanguard mutual funds, like Vanguard Healthcare, Vanguard Real Estate, Vanguard Technology, Vanguard stocks and like bonds. Like you can literally buy like 7 different, if you just want to be like, I want my money in different sectors and different companies, but I don't really want to research them. I really want to say that me, myself personally, I invest in everything. I got stocks, bonds, I got it all in my portfolio.
Yeah.
So what do you recommend right now? Because the next question I got, this is a good question actually, is should I have more stocks or bonds in my portfolio? I am 22 years old. I have Acorns.
Ooh. Okay, so let's take it away from Acorns. Let's say if you just had a regular brokerage account, because that would be more straight to the point investing.
Get it. All right, that's cool that you invest in the Acorns.
Yeah, but that's good though. That's really good. That's still good. But let's like get you into like, okay, you got your first set portfolio. I would go aggressive. With stocks. Aggressive with equities. You're young. You can take the risk on. Bonds are good though.
70-30. What do you recommend?
70-30. I think that's healthy because that's enough to hedge with bonds.
30% bonds.
In bonds, yeah. Go more with stocks because you can take on more risk and you get more risk. If you got the right companies, more reward. So, with the right,
you're not going to use this money for 40 years.
Exactly. You stacking for the long, like he said, you stacking for the long game. You only have to touch it if it's like emergency purpose. Like, okay, I got to take that something big. I'm going to have to liquidate some of my brokerage account. But to be honest, yeah.
To piggyback on what she said, if you truly feel like, okay, I want this to be safe. Okay, bonds are not 100% safe, but bonds usually, you're not gonna make a lot of money for bonds, but your initial capital usually don't depreciate as much. There may be like for example, okay, the coronavirus happened. Of course, bonds went down. Everything went down because of the virus. It was a worldwide pandemic. But most of the time, it didn't even, it's on its way up anyway. So it didn't really hit it that bad when it comes to the bonds. But